Welcome to Wall Street to Bay Street and our most recent update. It's after the market close on July 9th, 2010, and we want to give a quick update. Not a big analysis this weekend. As we had mentioned last week, before the July 4th weekend, that we expected a rally in the stock indices, stock market, stocks, and that's what we got this week. Significant rally over the last 4 trading days. And as I said, we would be looking to put out some new shorts if we got this rally. So what we have here, actually what we did earlier in the week, we closed out the remaining portion of our first solar puts. We made money on the first half, lost money in the second half, so it's generally a scratch trade. Now what we did late afternoon today is we bought some QQQ puts that expire next week, so it's a very short-term trade, not too much money at risk, but with potential multiple reward on that return. We've had quite a nice bounce. If we put our traditional Fibonacci analysis on here, we can see the price retracement from our most recent high, bounce back high, to here. We've traced almost exactly 50% as of the close today. So we put on some puts, and we might add some more Monday morning, depending on how the stock market opens up on on Monday. If it opens up higher, we'll probably add a few more puts, reduce our cost base, and expect a trade down into the week, as the market has rebounded significantly, anticipating decent earnings from the companies that are going to be, I think Intel and some of the major companies start their earnings announcements next week. The other position we put on late Friday, and I think it was a 25 lot put position on the FAS. Now, if you don't know, the FAS is a triple inverse of the financials. Now, just like we talked about the SSO, over time the triple inverses and double inverses degrade in value. So even if you've guessed exactly right on a long in any of these indices, since these indices reset on a daily basis, you'll actually, in many cases, not make anywhere near as much money as you would like. These are primarily vehicles for a daily trading basis, except for if you would like to short them, because the value degrades over time, and the value of a short should increase over time, even if the price stays sideways, but you have volatility in the stock. The volatility in and of itself will make the stock price decrease. Now, just so they don't work exactly with Fibonacci's analysis, but what we will do here is we'll put the price retracement lines on the FAS as well, and we can see here on a daily basis we're almost at the 618 retracement, so we're just past the 50% retracement up to the 618 retracement. And we've had a major drop over the last several months. I think this first drop coincided with the indictment of Goldman Sachs. It might have been the first drop here or the second big drop. But that was the start of the effective war on financials. And I like trading the FAS. It provides a good risk-reward return, especially when you're trying to short it, which we will use using puts. What we've purchased here are the August 23 puts to limit our downside, just in case the market takes off, which I do not anticipate that it will. If we have continued to rally up here, we will continue to add to our position. Let's just bring it up a bit closer here. So where we would cut it loose is if we broke this high level here. Let's remove these lines. So if we broke sort of 25 on this index, then we would cut our position loose. But 25 should provide a fair amount of resistance for the stock. As you can see, a number of people have purchased at 25, and a lot of people have purchased prior to 25. So if the stock gets up to 25, then you'll have a lot of natural sellers to sort of push it back down. People just want to get back to even. So those are our two new stock trades of the week. as the rally fizzles, the rally still looks relatively strong, but we'll monitor the rally probably on a 60-minute chart basis Monday and Tuesday to see if we see signs of weaknesses for the indices and stocks, and we'll probably tweet out any trades prior to any formal updates. What we also want to do is sort of look into some of the European indices. They've had nice runs the last couple of days, and the problems in Europe are nowhere near over. So we'll look. There's some more juice back in some of those ETFs. So we'll look at seeing if there's any opportunities over there. Welcome and good trading, and have a great weekend.